Okay, so let's get right into a pretty wild investment thesis. One author is calling this the arbitrage of the decade, and it's all happening in the world of AI and self-driving cars.
And this, right here, is the whole story in two numbers. On one hand, you've got Waymo, valued at a massive $100 billion. On the other, you have its Chinese competitor, WeRide, valued at just $3 billion. Now that's not a gap, that's a canyon, which really begs the question.
Is the market a genius here, pricing in risks we can't see, or is it completely blind to a once-in-a-generation opportunity? Well, this analysis from a thesis by Saji Matapat argues pretty forcefully that, yeah, the market is blind.
So how do we get to the bottom of this? The source material lays out 5 key arguments, or as the author calls them, 5 truths, that it says the market has totally missed or just plain gotten wrong.
And this idea of seeing is absolutely central to the whole argument. It's a powerful metaphor. The thinking is, these autonomous vehicles are finally starting to truly see the world around them. But the market itself, it hasn't had that moment of clarity yet.
Okay, so here they are, the 5 pillars of this whole counter-narrative. We're going to walk through each one, from the absolutely insane size of the market to a geopolitical angle that might just be the most overlooked piece of this entire puzzle.
First things first, the sheer scale. We're not talking billions here. According to ARK Invest, the market for robotaxis could be worth over $10 trillion by 2030. And here's the kicker. The thesis argues that WeRide and Pony.ai are pretty much the main publicly traded companies outside the US that are pure plays on this very tech.
Second, you have to ask, who's already catching on? Well, turns out the smart money is quietly making its move. A deep dive into recent filings shows that over 100 big institutions are building up their positions. They're not shouting about it from the rooftops, but their money is doing the talking.
Truth number 3 is about the money. A common knock on these companies is that they're just cash-burning science projects. Well, the author points to WeRide posting a pretty shocking 32.9% gross margin. The argument here is that this isn't just a science fair project. It's a real, scalable business with software-like economics.
Fourth, it's all about speed. We're talking about going from a project launch to being in production cars in just 7 months. According to the source, that kind of timeline makes traditional Western car company schedules look like they're moving at, a glacial pace. This stuff isn't just a PowerPoint slide, it's on the road. Okay, and that insane speed feeds directly into the 5th, and maybe the most fascinating truth of them all. A huge geopolitical advantage that basically turns China's domestic market into a global launchpad.
The thesis has a great name for this, the guinea pig gambit. The idea is brilliant in its simplicity. You train your AI in the most chaotic, unpredictable driving environments on Earth. You let it see every possible crazy scenario. And once it's battle-hardened, you unleash that superior tech on the rest of the world.
So, once your tech is ready, where do you sell it? This is where the Belt and Road Initiative comes roaring into the picture. Forget just roads and ports. Think of it as a pre-built export network to over 150 countries. We're talking about a ready-made market that covers nearly 2/3 of the world's population.
All right, so remember I mentioned that institutional stampede? Let's actually put some big names and hard numbers behind that claim because it's pretty revealing.
So for WeRide, just look at this list. It's basically a who's who. You've got top-tier hedge funds like Steve Cohen's Point72, huge sovereign wealth funds, and major ETFs like ARK. These aren't small players. These are the heavy hitters.
And it is the exact same story for Pony.ai. I mean, check this out. Fidelity. They didn't just dip their toes in, they built a position worth over $300 million. When one of the biggest asset managers in the world makes a bet that big, it signals some serious conviction. Okay, look, this all sounds a little too good to be true, right? So what's the catch? Because there is always a catch. Any credible thesis has to look the risks dead in the eye.
And the risks here are absolutely real. First and foremost, geopolitics. That is the elephant in the room. Then there's the tech itself. Self-driving is still an incredibly hard problem. Competition is brutal, both at home and abroad. And finally, just the simple, massive challenge of execution. Scaling a fleet of thousands of vehicles is no easy task.
So you have to weigh those very real risks against the potential rewards. And that's where this idea of an asymmetric bet comes into play. The author actually ran the numbers, so let's take a look at what the models say.
So here's a pretty straightforward model. You take Waymo's $100 billion valuation, then you slash it in half, a 50% discount just to account for all that geopolitical risk. And even after doing that, look at the potential upside here for 2026. So what this analysis really lays out are 2 different kinds of opportunities. WeRide seems to be the one that's more undervalued right now, the bigger potential bargain. But Pony AI, with its asset-light, software-first model, could be the one that just quietly compounds value for years and years to come.
But that was all just a near-term case. What happens if we look way out to 2035? Well, this is where the numbers get, frankly, a little absurd. If these companies can capture just a tiny sliver, 2.5% of their core markets, the potential growth is just astronomical.
And that really brings us to the author's final, pretty provocative thought here. The argument is that you're not just buying a couple of stocks. You're buying a piece of the fundamental infrastructure for our future cities. So the question it leaves us with is a big one. What if the market isn't just mispricing a stock, but mispricing the entire operating system of how we'll live and move in the cities of tomorrow?